are responsible for damage to farmers for now. But don't worry, stimulus is coming, and eventually the tariffs will actually benefit you. Even though the tariffs right now are destroying farmers, and the first stimulus checks from tariffs will be going to farmers within the coming week, farmers don't know if it's going to be enough to help the destruction that Donald Trump is causing to farmers. Now, in this, we're going to break down how much of the farming industry is being impacted by this and how this could impact companies like John Deere, for example. But remember, you've got a lot going on with tariffs. When we issue tariffs against China, as it did in 2018, issues retaliatory tariffs. In fact, just this morning, the Chinese literally responded to the United States and said that the United States has imposed unreasonable tariffs that create conditions that do not expand bilateral trade. This was the Chinese Commerce Ministry spokesperson just today. And this was in response to China being asked about buying our soybeans. Yeah, because, see, we make a lot of, well, we grow a lot of soybeans in America, way more than I thought. Take a look at this. Soybeans planted. This is a chart showing us a breakdown of 2023. We have 35% of our crop that's grown in America being corn, 31% soybeans, 19% wheat. And the states that produce the most are Illinois, Iowa, Minnesota, North Dakota, Missouri, Indiana, Nebraska, South Dakota, Ohio, and Kansas. The vast majority of these red states who voted for Donald Trump, unless you zoom in, you see like Illinois is listed as blue over here, but let's be real, that's mostly just Chicago. Or if you zoom in over here, you get like Minneapolis and St. Paul that are blue, but the rest, your farm territories, are mostly Donald Trump voters. And Donald Trump voters are getting absolutely reamed by these tariffs because you're getting hit from two angles. Not only are costs for machinery like steel or equipment or bins or silo equipment or whatever going up because of tariffs and steel and aluminum tariffs, but margins on U.S. soybeans are plummeting because our ability to export soybeans is tanking because China's just saying, you know what? If you're going to tariff us, we're just not going to buy your soybeans anymore. Now, you might wonder, okay, well, why does it matter? Well, again, soybeans, big production in the United States, but we don't eat all the soybeans. Understand this, in the world, the United States is the number 2 producer of soybeans, followed by Brazil at 169 million metric tons. We're at 118 million metric tons. The next third country is less than half of our production for soybeans. And so soybeans get sent all over. The problem is China doesn't want to buy our soybeans because of the trade war. And so prices for U.S. soybeans are plummeting below the cost to produce soybeans. This means farmers who usually 1 year do corn, and then 1 year do soybeans, and then 1 year do corn, and then 1 year do soybeans as part of their crop rotation, are getting screwed in 50% of the years. And it's easy to go, oh, well, then they should just not do soybeans. But remember, 31% of what we produce are soybeans. If we take that much production and push it into cotton or sorghum or wheat, we'll just tank the prices of that below the cost of production, and what happens? More farmer bankruptcies. Remember this, China buys a lot of soybeans. Statistically, they are the largest buyer of our soybeans. In fact, if we look at the data, we could see that, I want to say it's somewhere around 60. Here we go. Yeah. Of our exports, 60% of our soybean exports have historically gone to China, at least in the 7 years prior to the trade war. Of our total domestic production, so 31% being soybeans, of the total production that we produce in America, we export 28% to China. So like 1 in 4 soybeans that we grow in the United States used to go to China. And now China's basically like, hey, F you. And so now that it's not so much that like, oh, well, we, can still sell the other, 72%. It's not that. It's that because we've lost such a big buyer, the price falls below the cost where it's profitable to actually grow the product at all. That screws farmers. Now, this is where a lot of people have been asking, like, okay, so like, what does this end up doing to like stocks like John Deere? Well, it's no surprise that John Deere's revenue has fallen 9 to 12% in the last 2 quarters when you compare it to last year. But it's not just their revenue that's falling, their gross profit is down, suggesting that their costs, steel and aluminum tariffs probably, are showing up in their cost of goods sold. So their margins are going down and they're selling less. So they're selling less and they're making less money. That sucks. Now, some people look at John Deere and they're like, hey, it's a buy the dip. You know, Wall Street has an expected 25.6% growth rate for John Deere in earnings over the next 4 years on average. That's 25% growth. That's great. And they're trading for a PE ratio of 25.3, which means you're at a 1 peg. That seems really low. But if that earnings growth actually falls to just 10%, they'd be at a very expensive peg ratio. So you have to be careful because it's all in that growth rate for John Deere. And this is where people are like, okay, well, if Donald Trump issues stimulus to U.S. farmers that he's bankrupting, maybe they'll go buy, John Deere products, because it's not going to be the Chinese that are going to buy John Deere products. Look, in 2024, John Deere collected revenues of $4.3 billion from Asia, Africa, Oceania, and the Middle East. All of those regions together represented just 8.4%, which means China is probably less than 5% of John Deere's revenue. The vast majority of John Deere's revenue comes from the United States. And Donald Trump is bankrupting U.S. farmers. Here you can see the prices of corn have fallen since Liberation Day. You know, all of the COVID gains are basically gone. In addition to that, China has made 0 purchases of U.S. soybeans, which is problematic. This is why, Donald Trump is like, yeah, we're going to have to stimulate the sector because we kind of screwed it. Now, he's dangling this carrot that in the longer term, the tariffs will end up benefiting you. Unclear about that, especially since China, according to the Hong Kong South China Morning Post, says China prepares for long U.S. soybean standoff with huge Brazilian imports. That's the thing. See, back in the 90s, China already started thinking about decoupling from the United States, which got more extreme in 2018, where China has built up their infrastructure support of Brazil in favor of Brazilian soybean production over relying on the United States. So China's been preparing for this long game for a very long time. Keep in mind, the last time Donald Trump stimulated the farm industry was after the 2018 tariffs wreaked havoc amongst our farmers, shrunk our farming industry in favor of countries like Brazil, where exports fell over $10 billion in 2018 to 2019, soybeans being the hardest hit. So then Donald Trump issues stimulus, which ended up stimulating farmers to the tune of around $22,000 per operation. Okay, great. But what does $22,000 do you? Does that buy you a new $1 million John Deere tractor, like a reaper? No, of course not. Some of these tractors are $500,000 to $1 million. Some of them are multi-millions of dollars. The AI service contracts that John Deere now wants to get their recurring revenue model is really sexy to people who want to bet on AI with infrastructure products or capital good products and recurring revenue, SaaS revenue. That's fantastic. But if we're selling fewer machines because farmers are going bankrupt in America and most of John Deere's revenues are coming from U.S. farmers, then Donald Trump's tariffs are directly responsible for the bankrupting of U.S. farmers and the damage that's being caused to John Deere. And John Deere stock doesn't even reflect all the real damage yet. Maybe there's some hope that this stimulus will actually help prop up farmers to the tune where they're going to go buy machines again. But I think this is survival stimulus. This is more of a bailout than it is stimulus. So keep that in mind. Now, I mean, presumably stimulus this time would be greater than the $22,000 on average per operator that we saw in 2018. Mind you, a lot of that money could go to big operators, so the actual check that many smaller farmers get might be substantially smaller than that. But the reality is, this is one of the beginning transitions of damage that we are seeing from tariffs. And these tariff impacts will keep popping up in areas that we're just not aware of until they happen. And a lot of people are cheering that, oh, tariffs so far aren't really causing a lot of, problems or inflation, whatever. Back in April in the Meet Kevin membership and even on the channel, we were pretty clear that we actually went bullish towards the end of April. And like, you know what? You don't need to sell here. Set some trailing stops because the long-term impacts of tariffs are going to take months to years to realize. And, this is an early warning of some of these impacts that are coming out. And it's just really going to be a matter of time before we actually lay out all of the damage that's being done. But this soybean situation is a disaster for our American farmers. And it's likely that any kind of stimulus that Donald Trump promotes over the next few weeks, that's the expectation, that we're going to get the stimulus over the next few weeks, is going to be too little too late, which is unfortunate because, I don't think the American farmers deserve that, especially since I would argue that a lot of American farmers probably voted for Donald Trump, thinking that Donald Trump was going to be good for, American farming. Oops, that sucks. So we'll see. But the coming weeks are where we're expecting to see where the stimulus actually ends up coming from, or if it ends up coming and how much it ends up coming in at. So we'll see. But that's what's going on with the American farmers and John Deere.
Knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.